Caitlin Long's Custodia Bank has officially launched their Bitcoin custody platform. A16Z leads a $4.2 million seed round investment into a UK Web3 infrastructure firm. Kraken is looking to launch its own Ethereum Layer 2 scaling solution to compete with Coinbase. And an Ethereum whale who bought 250,000 ETH at 30 cents has lost his password. Let's break it down. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, I want to start off by highlighting the hypocrisy of Nouriel Roubini. If you don't know who he is a fake economist hack, and I call him that because he has been trashing Bitcoin, crypto, and the industry for years. But look at this, Binance CEO CZ called him out because apparently he is working on a project that has a token. So look at that, right, folks? I always say, watch what they do, not what they say. Nouriel Roubini has been a very vocal critic and he's getting exposed. So CZ said, some people are shameless. After attacking Binance publicly on stage a year ago, now issues a token and puts Binance logo on their website without permission. So unbelievable. There's even a BlackRock Goldman Sachs logo here. I don't even know if that's legit. Now, the name of the project, CZ blurred that out, and I understand why. He doesn't want to give these guys any type of press here or try to drive people there to invest in whatever token they're building. But this guy, Nouriel Roubini, is a piece of shit, in my opinion, and I hope he's listening. Nouriel, you're a clown. Now let's move ahead to some really big news, folks. So Custodia Bank, which is owned by Caitlin Long, who I've had on the podcast many times, has officially launched their Bitcoin custody platform. Custodia is a bank built by Bitcoiners, and we offer segregated custody accounts on our custom-built Bitcoin custody platform. They tweeted out, they also said, our Bitcoin custody service is purpose-built for businesses, fiduciaries, investment advisors, fund managers, and corporate treasurers. We're currently offering some of our services in various U.S. states. As a non-lending bank, we offer integrated Bitcoin custody and U.S. dollar services, which is not FDIC insured, under one roof, which simplifies other operations and reduces risk. We recently earned approval from the Wyoming Division of Banking to go live with our Bitcoin custody service. Since we built our Bitcoin custody platform in-house, we're especially grateful to those willing to help us by providing user feedback. This is great news, folks. This is a bank built out of the crypto industry. Caitlin Long, of course, being very bullish on Bitcoin, has been fighting for crypto regulations for a long time. And we saw the Fed did not want to give Custodia a master account. And Custodia, in fact, sued the Fed. The Fed tried to get the lawsuit dismissed, but then the judge said, no, you're not dismissing this, right? So we're seeing just the operation choke point from the government and the pushback against crypto to protect the TradFi incumbents, but we're winning in the courts. So Caitlin's bank is a big win, folks. Going live, it's a big win, and I hope she wins her lawsuit against the Fed and she's able to get that master account, folks. So huge news. Now, Caitlin was also tweeting out because she's at the DC FinTech Week, which Gary Gensler, Ripple CEO Brad Garlinghouse, and other crypto industry leaders will be at. And the current OCC acting chair, whose last name is Su, if I'm saying that right, she said he unfortunately displayed a fundamental misunderstanding of crypto at DC FinTech Week. He supports private blockchains for tokenization to solve settlement problems, but then said crypto is only for speculation and criminals. Unbelievable. So you know what he's supporting there, right? He is supporting JPM Coin, a private blockchain, a centralized blockchain controlled by the biggest bank in the world. That's what he wants. So you can tell who's pulling his strings, right? He's a puppet. His talking points are probably coming straight from JP Morgan, but we've seen these walled gardens are not going to succeed. They're going to work within their own ecosystem. So JP Morgan and all its branches can use their JPM coin, but no way in hell is a Bank of America or Citibank and these folks going to trust that coin, right? You're creating just a new centralized system where people are not going to trust each other. So this is why the public permissionless blockchains are the way to go, and setting up the proper rules. So this guy's clearly a puppet for the TradFi folks. She said, Caitlin continues, she said, I've complimented Sue multiple times in the past, but must call this out. His remarks ring hollow when the federal bank regulators greenlight the big banks like BNY Mellon to provide Bitcoin and Ether custody, but block startups like Custodia Bank. And they ring hollow when a giant incumbent, BlackRock, is in the pole position for a Bitcoin spot ETF approval over upstarts whose applications have been pending for years. Great context, right, folks? I've been talking about it. These two things happening in parallel. Gary Gensler and the SEC, the Fed, and these different folks weaponized against crypto startups, yet BNY Mellon gets crypto custody license. BlackRock applying for Bitcoin spot ETF, right? Fidelity, Charles Schwab, and Citadel launch a crypto exchange. MasterCard and Visa are expanding their use of crypto and blockchain. PayPal launches a stablecoin. See the two things running in parallel, right? That's not by coincidence or accident. It's a clear agenda, and Caitlin is absolutely right. She highlighted here that Mike Cagney just spoke the truth. Public blockchains are useful, but private blockchains aren't. Might as well use a database instead. She said, this is on target. I hope federal bank regulators learn this. Cagney's right. The tokenization that federal bank regulators want is only useful on public blockchains. So clearly this a guy who's the acting chair, he is a TradFi puppet, and probably, given his talking points from JP Morgan and whoever else. Now here, Omid Malikan weighed in on Caitlin's comments and said, I want to echo what Caitlin said. Sue's comments are more evidence that U.S. regulators care more about protecting incumbents than embracing innovation or inclusion. Private blockchains are exclusionary by design, not to mention useless. I wouldn't say they're useless. They're useful within those ecosystems, right? You want a private blockchain? Have at it. Go for it, right? But don't expect anybody to use it outside of your company. So like I said, JPM Coin is probably working really well between the JP Morgan headquarters and all the different branches around the world. That's fine. Good luck to you, right? Best of luck for you. That's fine. But nobody outside is going to use it. So I think you all get that, right? Now, quick word from our sponsor, and that is Uphold. Uphold is a great crypto platform I've been using since 2018. You can buy Bitcoin and all the top altcoins on here. They have 260 plus cryptocurrencies. They are fully reserved and backed. They do audits, so you don't have to worry about your funds being lent out or commingled. Uphold, I've interviewed their CEO, CFO, and many folks. You can also trade precious metals on here, and 37 fiat currencies. They're available in many different countries around the world. So if you'd like to learn more about Uphold, please visit the link in the description. Now, we got big news here that A16Z Crypto leads $4.2 million seed round investment in UK Web3 infrastructure firm Pimlico, if I'm saying that right. The Pimlico aims to make Ethereum easier to use by leveraging smart contracts via the ERC 4337 token standard. So on one hand, it's great to see capital is still flowing into crypto companies and coins, very bullish, and great to see that a lot of different companies are trying to fix the Ethereum scaling issue. And I think they will get it, but this is why we need competition. You need different blockchains out there because Ethereum still has some challenges. So here's a quote from a statement made by the CEO of Pimlico. Smart accounts tackle many limitations the Ethereum protocol has hard-coded, namely that each native account is linked to a single private key. Smart accounts introduce completely customizable logic, unlocking capabilities such as gas sponsorship, gas payments with ERC20 tokens, better account recovery, spending thresholds, Face ID or passkey verification, among many other use cases we expect from our account. So great to see this is happening. Great to see capital is coming into the market. And, if you're an entrepreneur, innovator, and you got an idea, folks, now is the time, go pitch it to these big investment firms and hedge funds. You can get money because the capital is flowing into this market. Now, we got news here that Kraken wants to own its own layer 2 network. So they're looking to follow Coinbase's blueprint here where they launch Base. And look, we're seeing a lot of layer 2 solutions for Ethereum. It's kind of annoying how many there are out there. And the fact that centralized exchanges are building their own, it's not ideal for me. Look, some people are going to use it. That's fine. I personally don't like centralized blockchains, tied to exchanges, but it is what it is. I think there is a market here, and these exchanges recognize they can make money off the fees. So Coinbase, I think someone did the report where they showed Coinbase was making some nice fees off of this. And of course, that's going to boost their revenue numbers. It's good for their stock price and so forth. So let's see where Kraken goes with this. It could also be Kraken is, in addition to getting more fees, going to look to do an IPO in this next bull market cycle. So we'll see what happens, but not too much to report on here. It's just that they're looking to do their own thing. Now, the ICO whale who bought 250,000 Ethereum at 30 cents forgot his password. Great reward offered to anyone who can help. This is wild, man. I can't imagine having this amount of money locked up and I can't touch it. I've interviewed Stephen Thomas, who was formerly at Ripple. He was an early Bitcoin adopter, and he has $230 to $40 million in Bitcoin locked that he can't access as well. So it's a tough position to be in. Now, I don't feel sorry for this guy because he's, I think, pretty well off. The fact that he bought in the Ethereum ICO in 2014, he purchased the Ethereum tokens for $75,000. So the fact that he had $75,000 to throw at a project which he did not know was going to succeed or not shows that he had capital. So his name is Rain Lomas, if I'm saying that right. He's the founder of an Estonia-based LHV bank. So he's the founder of a bank. So I don't feel too bad for this guy. But yeah, imagine having these funds locked up and you can't touch them, folks. You probably have to wait years for the solutions to come out and people to be able to crack this. It is a real problem, but that's the feature of cryptocurrencies and the blockchain, right? You got to have those seed phrases. Finally, Animoca Brands Japan announced a strategic partnership with Cool Cats Group. So Animoca Brands continues their expansion. They are one of the biggest investment firms, and they invest a lot. They get a lot of capital, and they are building some of the biggest things in Web3. So according to Tuesday's announcement, Animoca Brands Japan has purchased equity shares in Cool Cats Group. Further to the equity purchase, Animoca's KLKTN digital experience label has purchased NFTs of all three of Cool Cats collections from the secondary market. The NFT purchase was made via San Fran Tokyo, if I'm saying it right, KLKTN's virtual decentralized city, which has a focus on licensed anime and Web3 intellectual property. Folks, I know some of you may not care for NFTs, but as always, that's okay. You don't have to own any NFTs. What you should be owning is the token for the blockchains that are getting adopted for NFTs, right? That's the key. And where are those NFTs being used? Is it just like JPEGs and artwork, or is it being used for Taylor Swift concerts and insurance contracts and deeds and so forth, right? That's where you got to do your research. But nevertheless, folks, this type of adoption and building will drive the value of the respective blockchains and their native tokens. So this is why you want to keep an eye on this news. Whether you love or hate NFTs, or you own or you don't own, if you do own the token of the blockchains that these NFTs are on, then you are positioned. And that's the way I'm looking at it. I personally don't own any of these NFTs, Cool Cats, Stoner Cats, CryptoPunks, you name it. I don't own any of that. But on the blockchains that they are minted on, I got the tokens, and I bought the tokens on when there's blood on the streets at the lows, right? Looking to sell the highs. So that's how I'm approaching it. Well, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Hit the 5-star rating on the podcast platforms. Don't forget to check out my interview with Austin Campbell. It's a great one. We talk about the SEC stablecoins and much more. I published it this morning. Check it out. Also, sign up for the free email newsletter on Substack. It's 100% free, full of crypto news, insights, and much more. Thank you for your support, and I'll talk to you all later.